This is Larry Williams, and I'm glad to have you here looking over my shoulders on my TradeShark charts. We're going to be looking first of all at the price of gold here today. You can see gold on a daily basis going all the way back to the 1st of 2013. I'm going to show you two of my indicators are just great. The one you see in the chart is a measure of accumulation going on in the marketplace. Notice when it looked like the market was rallying in here, we were actually diverging. The market fell out of bed. And we got to a nice buy point here. We were able to see some accumulation coming in the market and a rally. But look at this, the end of the year rally. My gosh, the professional accumulation started coming in the market here. And lo and behold, of course, came the rally. Now, that's one indicator I use to give me the sense of when a market is under accumulation or under distribution. We can see what's going on right now in the gold market. Notice we've rallied it here, but we have not picked up accumulation. The professionals stopped buying the market back in here. Now, that's going to be resolved in one of two ways, this market coming down or an immediate pickup. So we know that the market, you can bracket both sides of this market. The trend's been up. We should break out to the upside, but certainly falling below trend lines coming in here would be your sell signal in the market, especially when we see the professional sentiment index. This measures when the professional people in the market, the funds, etc., are primarily bullish or bearish in a marketplace. Here, they were very bearish on a market right here. You can see they were very bearish on the market here. They were very bullish on the market right here. And they were very bullish on the market at this point. So we can see when they're bullish right now, they're in the bearish area. Remember, this is the bullish area. It's the area associated with the rallies in the marketplace, this being the bearish area. Where they're very bearish here, that was one of the most bearish readings that we've seen, and the market fell out of bed. So we're in that bearish area, and we see that the market has not been under accumulation, so we need to watch out for trend changes in the market. That's how you can use these tools. Now that's gold. I'm going to like to show you these tools on two more charts. What traders have a problem with is understanding the visibility of the future of the marketplace. That's where this professional sentiment index comes in. It's just so incredibly important. We know when the professionals have been selling the market, like in this area, in this area, in this area, we're close to a significant top in the marketplace. You can see the declines that came in here, the decline that came in right here. And you can see where we are now. The professionals have moved over to the sell side, so we're on alert. It doesn't mean the market's going to rally immediately, but it means we've got to be very careful here. The market is suspect to a decline in the making. By the same token, rallies tend to come when we're high in this index. You can see we're high here, great rally, very high reading here. We get a rally in the marketplace. The rally that we saw at the end of 2013, well, the professionals have been in the buy area, hadn't they? Now, not only that, we can then look at the accumulation going on in the marketplace. As we made a new low on bond prices here, we didn't here. In other words, the market declined here. Price-wise, it looked weak, but in actuality, the holders of this market, the electronic market makers, were holding on to their prices. They were not selling, and it's no wonder we saw a rally in the market. The same thing at the top up here. A new high in price, right? See that? Real clear. But we did not have a new high in accumulation. That's a really critical point, suggesting a move to the downside. And this rally that we saw here, well, again, look at the big difference between the divergence between accumulation in the marketplace and price action. You see the same thing at the top happening up here as well. New high in price, not matched by accumulation, and down goes prices. So that's how you can use these indicators. I hope you're getting a sense of that. We've looked at the bond market. We've looked at the gold market. Let's take a look at the S&P. Very interesting market. Let me show you what's going on there. You should be able to use the lessons I've given you recently in the gold market and the bond market regarding the S&P E-minis. Remember, whenever we see this index high, it's suggesting to us that the professionals have been accumulating in the marketplace. You can see they were high at this level, they were high in here, and look what happened. We're high in here, look what happens, we're high over here. They are buying, they are very bullish on the market. This is actually a measure of their bullishness. At this point, you can see they were 90.7% bullish. That's really wildly bullish. By the same token, at this level, they were not very bullish. We're only 18.5% of them were bullish at this level. So no wonder the market came down. The year-end rally that we saw in stock prices has started kind of in mid-range. We were very bullish back here. As you can see, the market rallied, 88% were bullish. We got into not quite the sell zone, but there was some bearishness in this market. It pulled back, and interestingly enough, this is where accumulation is so important. See how prices were lower here than here? Clearly, it looked like price weakness, but my X-ray view of the market, the accumulation said, no, the market's just screamingly positive in here, isn't as we're making new highs in accumulation. The market, it's no wonder the market took off to the upside. So we're going to look for divergences between price action. You can see it happening here. The market looks strong, but we're seeing divergence in accumulation in the marketplace. Same thing over here, and the market decline. So I really like these two indicators. They are available only here in TradeShark to give us the opportunity to see when a market is set up, to give us a perspective that, aha, in fact, the decline is coming. Now, right now in the S&P, we're in the middle zone here. We don't know for sure if a market is really set up to be a buy or a sell, and that's fine because that way we're not hoping something will happen. We really want to be taking action at these time periods in this middle ground. We'll let other people know, fight that battle, because that's not our battle. We want it when the odds are heavily in our favor, and that's in this zone and in this zone. Then we can confirm it with accumulation going on in the marketplace. Well, I hope you learned a lot by looking over my shoulder here at TradeShark. Great indicators. I think you now know how to use them, and I hope you will use them well and use them to your advantage. Larry Williams wishing you, as always, good luck and good trading.